Most of the nation continued to see some unimpressive job growth numbers, but one metro is producing some surprisingly good numbers, and that's Louisville, Kentucky. And those job numbers are translating some very healthy numbers for the local apartment market. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons, your Louisville update. Let's start right off with the economic story. This chart is showing you annual employment change by quarter over the past decade in Louisville, and you can see that in Q2 2012, the metro added 20,700 jobs annually, and that was Louisville's largest number in 14 years. Lots of growth, in particular in the trade transportation category and also in admin support jobs, and the bulk of that is coming in obviously in lower paying jobs given those two sectors. But that still does lead to demand for apartments. And let's look at the top 5 metros nationally for proportional job growth in the past year. And there's Louisville at number 4 among the core 100 metros, a 3.4% expansion rate, very strong. And that's what makes Louisville the only semi-surprise on this list, which includes 3 Texas markets plus San Jose, the nation's tech epicenter. And the job growth is translating to some tightening apartment occupancy rates. Occupancy in Louisville jumped 70 basis points in Q2, and it's up 50 basis points year over year, and that brings the rate to 95.6%, the metro's best reading since 2007, and it's also 40 basis points better than the U.S. average. And let's look at occupancy by age. And you can see that rates are super tight among apartments from the 80s, 90s, and 2000s, 97, 98% range. Really doesn't get much better than that. So the overall rate in Louisville would be even better if not for some of those older apartments. Louisville has an awful lot of apartments built in the 1970s, and those are 94.8% full, still a solid rate. And the pre-1970 category, much weaker, 92.4%. And let's switch gears to rents. This chart shows you quarter over quarter rent change. And you can see that second quarter continues to be very good for Louisville apartments, so much so that over the past 16 quarters, the 4 largest quarterly hikes have all come in a second quarter period. Rents climbed 1.8% in Q2 2009, 2.5% in Q2 2010, 2.4% in Q2 2011, and 2.6% in Q2 2012. And that latest increase was Louisville's largest quarterly hike in 8 years. Year-over-year rent growth levels are down a bit since hitting 4.6% 2 quarters ago, but still solid. Rents up 4.1% annually. A very good number for Louisville. Prior to 2011, rent growth hadn't reached 4% or more since 2004. And 2 submarkets to highlight for you. The first one, Central Louisville, led the metro with an annual rent growth rate of 6.1%, and good occupancy growth too, up 170 basis points to 95.4%. And another one for you, Northeast Louisville, didn't get as much rent growth, 3.9%. That's a couple ticks below the metro norm, but Northeast Louisville did lead the pack with an occupancy rate of 97%, and that was up 70 basis points year over year. Overall, it's hard to see the Louisville apartment market getting any better than where it's at now. Historically, these are very high numbers for the local apartment sector, and one problem is that these job growth levels are almost certainly unsustainable. But if the drop-off in job growth is just modest, Louisville's apartment sector should continue to post strong numbers. We could continue to see occupancy in that mid-95% range, and we could see rents continue to climb around about 4% or so. And that wraps up for Louisville, so until next time for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.